Okay, dear students, welcome to the live, I would say, revision as well as mock ACC mock debrief September 2025 taxation. We have already discussed the section A and B. Today we'll be discussing the last section, which is section C. Obviously, you will be solving this on the spreadsheet, but just for the sake of explanation, I'll be using the OneNote to solve this. Part A of question 31. It's a 9 marks question. We know that in taxation and section C, you will have actually 3 questions, one for 10 marks and two 15 marks questions each. And two 15 marks question each, one you will have on individuals and second you will have on corporation tax. Determine if there will be an overall saving of tax for the year ended 5th April 2025 if John purchases the property via limited company rather than purchasing it personally. So if John is not buying this property by himself, if John buys this property but through via company, so we need to calculate overall tax savings. Your answer should include calculation of John's income tax liability if the purchase of property personally and purchase it via limited company. So basically, in both the ways, we have to calculate John's income tax liability if property is purchased via company or it is purchased by the John. You should ignore, there is no need to go for NIC. Categorically, it is mentioned, ignore NIC. So obviously, then we'll ignore it. So let's read the question scenario now. This scenario relates to two requirements. You should assume that today's date is 15 March 2024. On 6 April 2024, John will purchase a residential freehold property. Okay. Which will be let out. Fine. However, John is unsure whether to purchase the property personally or via limited company. The limited company would be incorporated for the sole purpose of purchasing and letting out the property, and John would hold all the shares in the company. So John will be the only and solely shareholder of that company, regardless of whether the property is purchased personally or via limited company. The property will be let throughout the year ended 5th April 2025 at an annual rent of 3,000, at a monthly rent of 3,600. It means if I multiply this with 12, I will get the rent of the entire year, 3,600 into 12. I'm getting 43,200. The purchase of the property will be partly financed with a repayment mortgage. Mortgage interest 15,000 will be paid during their ended 5th April 2025. Students, if you recall, when an individual has taken the loan, either to buy the property or after taking or in the owner has taken the loan for any capital expenditure on the property, even revenue expenditure on the property, if owner has taken the loan, number one, interest paid on that loan is not deductible from the property income. Simply, we will have to calculate the income tax liability, and from that income tax liability, we will deduct finance cost relief, and that finance cost relief will be interest multiplied by 20%. No matter individual is a higher basic or an additional rate taxpayer. Simply whatever interest owner has paid, we'll take that interest multiplied by 20%, that will be deducted from the income tax liability of owner. The other expenditure on the property for the year ended 5th April 2025 will be amounted to 5,600. This will all be allowable. So simply from this 43,200, I will deduct 5,600. Okay. John will also have an employment income 70,650 for the tax year 24-25. If the property is purchased via limited company, now just leave that right now. Your answer should include a calculation of John's income tax liability if purchases the property personally. Now let us first calculate income tax liability of John. If John purchases the property personally, so let's say John purchase the property. John purchased the property personally. Let me just show you working. We can do the working here. Working one, property income. Very easily we can calculate rent. If I'm not wrong, 3,600 per month multiplied by 12. Students, I'm getting 43,200. Interest we cannot deduct. We know that whatever interest John has paid, we'll take that interest multiplied by 20%, and that will be deducted from John's income tax liability. We have got other allowable expense, 5,600. So simply here comes your property income. Students, I'm getting property income 37,600. So property income 37,600. We also have employment income of John. Let's see employment income. John will also have the employment income 70,650. Net income, or you can say total income, 37,600 plus 70,650. Students, I'm getting 1,08,250. You can see that your net income is more than 1 lakh. When your net income is more than 1 lakh, so you need to check adjusted net income, because if A and I is more than 100,000, then personal allowance will reduce. So personal allowance, please, you should be writing properly. There's no need to use abbreviations. Let's check for the personal allowance. Adjusted net income, we'll take net income, which is 1 lakh 8,250. A student, from this 1 lakh 8,250, we will deduct gross PPC, which we do not have. Gross gift, aid donation, also we don't have. So your ANI is actually more than 1 lakh. When ANI is more than 1 lakh, so this John will not get the entire personal allowance of 12,570. Personal allowance will be reduced. 1 lakh 8,250 minus 100,000 into 50% or 1 upon 2, it's the same thing. So logically, personal allowance will be reduced by 4,125. Personal allowance will be reduced by 4,125. So 1,25,000 or 12,570 minus 4,125. Students, John will get personal allowance 8,445. This is what John will get. Taxable income. Let's see the taxable income out. Students, I'm getting taxable income 99,805. Now let's simply calculate income tax liability. Can I say entire 99,805 is a non-saving income? So 37,700 into 20%, 7,540. 99,805 minus 37,700 into 40%. Let's see. Students, I'm getting 24,000. Let me recheck. 99,805 minus 37,700. Then 40%. Yes, I'm getting 24,842. Okay. Now simply let's see the total. Okay. Okay. Can I say just now we have to deduct only one thing? If you recall, interest, finance cost relief, and finance cost relief is whatever finance cost interest John has paid into 20%. Less finance cost relief. Interest into 20%. 7,540 plus 24,842 minus 3,000. Students, I'm getting 29,382. This is simply income tax liability. So basically, John will have to bear the tax 29,382 if John personally purchases this property. Okay, now let's see. If purchased via company, then what happens? If the property is purchased via limited company, then the company's corporation tax liability for the year ended 2025 will be 4,294. And John will withdraw dividend from the company totaling 7,000 during the tax year 24-25. Okay, now purchase via company. Let's see what happens. So property is purchased via company. Can I say if the property is purchased via company, then John will have two sources of income. One is non-saving, which is employment income. The second is dividend income. And we have to calculate John's income tax liability. It is mentioned in the question. Non-saving, dividend income, and total. So they have given us employment income, if I'm not wrong. Employment income is 70,650. 70,000. Dividend income is 7,000. Of course, we will deduct personal allowance from the non-saving income. 12,570. Let's see the taxable income. 70,650 minus 12,570. Students, I'm getting 58,080. And 7,000. 65,000. This is your taxable income. Of course, first we have to tax non-saving and then we are going to tax the dividend income. Let's come here. Non-saving 37,700 into 20%, 7,540. Non-saving is 58,080 minus 37,700 into 40%. 58,080 minus 37,700 into 40. I'm getting 8,152. Now, student, if you recall, every individual, when it comes to dividend income, every individual, irrespective of their tax paying status, every individual gets nil rate band of £500. So dividend, nil rate band, dividend income total is 7,000 out of 7,500 we have taken in nil rate band. So remaining 6,500 definitely falls in high rate band because basic rate band is already fully utilized. So 6,500 dividend income, 33.75%. And these tax rates actually they will be given to you in exam. So you should not be worried about that. I'm getting 2,193.75. So make it 2,194. So this will be income tax liability if it is bought 7,540,8152 plus 2,194. Students, I'm getting 17,000. So John's income tax liability. But story does does not end here. Why story does not end here? Because the property is purchased via company, and we have corporation tax liability as well, which examiner has given to us. Corporation tax liability 4294. Basically, John owns 100% of the company. 429. What was that? 4294. 4294. Let's see what will be the overall taxation. We were here. No. Okay. Corporation tax liability. 42. Here comes the total tax. 17,886. I'm getting 22,000. Students, if it is if John buys the property by himself, can I say if John is going to buy the property by himself, then John will end up by paying more income tax? Yes or no? Please reply. Students, please reply on that. So what was the amount? I need this amount. 29,382. Property purchase personally. Total tax will be 29,382. Property purchase via company. 22,180. Can I say if we buy a property via company, there is overall tax saving. $22,180. I'm getting 7,202. Overall tax saving will be 7,202 when overall tax saving will be 7,202 if property is bought via company. So I hope it is clear to everyone that buying a property via company is better for John. Okay. And we have one mark question because we know that there are 3 questions. One is 10 marks and 2, 15 marks each. Explain one way in which calculation of future taxable gain on a property disposal made by limited company would differ from the calculation of taxable gain on the disposal made by personally by John. Can I say if company is going to sell this property, then companies, they don't get annual exempt amount. Students, can I say annual exempt amount, which is 3,000? We know that it is only available to the individuals. So simply you can write annual exempt amount will not be available on taxable gain when property is sold by the company. So I strongly believe this is 100% clear to everyone. That was the first question of section C. Now let's move to other questions. Where are the other questions? John, we've done the John. Okay. Students, straightforward is a 15 marks question. Calculate George's income tax liability for the tax year 24-25. We are just required to calculate George's income tax liability, tax year 24-25. Let's read the scenario. This scenario relates to one requirement. Okay. George is the finance director of Quick PLC, a consulting firm. The following information relates to his employment income for the tax year 24-25. George is paid director's remuneration 9,000 per month. So 9, 12, 1,08,000. So John's salary is 1,08,000. During there, George paid 150 a month to selected charities under approved payroll giving scheme. 150 into 12. Let's see how much we are getting. 1,800. Students, it's a deductible expense. This will reduce George's employment income. Read it again. During there, George paid 150 a month to selected charities under an approved payroll giving scheme. So when you are donating under an approved payroll giving scheme, then such a contribution is a deductible expense, and that will actually reduce your employment income. From 6 April 2024 until December 2024, George used his private car for business purposes. During this period, he drove 15,000 miles in the performance of his duties for Quick PLC, for which the company paid an allowance of 40 pence per mile. Here, basically, we have to compare the reimbursed amount, which what is the name? George has received with approved mileage allowance. If George has received more than approved mileage allowance, then difference is going to be a taxable benefit. If George has received less than that, difference is going to be a deductible expense. According to approved mileage allowance, first 10,000 miles, it is 45 pence per mile, which is allowable. And after that, 25 pence per mile. So we have to compare. If amount received is more than approved mileage allowance, then difference is a taxable benefit. If amount received is less than approved mileage allowance, then difference will be a deductible expense. Okay. How much George has received? 40,000 or 15,000 to 0.46,000. And how much he should have received according to approved mileage allowance? First 10,000 mile, it is 45 pence per mile. After that, it is 25 pence per mile. So let's see. Actually, he should have received 5740. We can see that actually George has received more than that. So there's a taxable benefit of 250. George has actually received more than approved mileage allowance. So that is why there's a taxable benefit. Okay. And taxable benefit is 250. From 1st January 2025 to April 2025, Quick PLC provided George with a diesel company car with a list price of 43,000 list price. The car was purchased by the company at a discounted price 38,000. Actually, this 38 is irrelevant for me. Why? Because if you recall, how do we calculate car benefit? We take list price into CO2 percentage. George contributed George contributed 6,800. Can I say, student, the maximum contribution which employee can make is 5,000. Employee can make more than 5,000, but that will not reduce the list price. Maximum we can reduce the list price by 5,000. Even though the George has contributed 6,800, but for us the relevant amount is 5,000. Logically, this 5,000 will be deducted from 43,000, which brings your list price to 38. So CO2 percentage into 38,000 into number of months, they're just 3. It has an official CO2 emission rate 162 grams per kilometer. The car does not meet RDE2 standard. So just deal like a petrol car, then add 4%, or you can directly start from 20%. Quick PLC also paid all the running cost of the car, including fuel. Student, fuel benefit is straightforward. You just need to calculate the percentage. If once you have calculated CO2 percentage, then simply we'll take 27,800 into CO2 percentage, then just 3 months. You will get the fuel benefit. So it is 162. Let me show you here. CO2 percentage. Since number one, it is a diesel car. Second, it does not meet RD2 standard. So for at 55 grams per kilometer, instead of starting from 16, I'm starting from 20%. Plus 162, always round down to nearest 5. 160 minus 55 upon 5. Let's see what I'm getting. 160 minus 55 upon 5 plus 20. Students, I'm getting 41%, but we have to restrict to 37%. If you recall, either it is a diesel car or a petrol car, no matter. The maximum percentage will be 37, not more than that. So simply we'll take the list price, which is now 38,000 into 37% and then 3 by 12, whatever comes. For the fuel benefit, we'll know that we'll take 27,800 into 37% and 3 by 12. Then we'll be solving it properly. Don't worry at all. George was unable to drive his car for 2 weeks during Feb 2025 because of an accident. So Quick PLC provided him with a chauffeur at a total cost. So whatever company has paid to the chauffeur, the entire salary, entire payment to the chauffeur is a taxable benefit for you. Payment to the chauffeur is a taxable benefit for George. So entire 2,000 becomes taxable benefit for the George. From 1st January 2022, George was provided with a laptop computer costing 2,500, primarily for the business use. Now, this is important, student, and stop. We know that other than car, accommodation, and first mobile phone, whatever asset is given to the employee for their personal use, then we take the market value of that asset when it was first provided into 20%. We calculate taxable benefit. But if kindly read the question nicely, it question says this laptop was primarily given for the business use, not for the personal use. If this laptop was given for primarily for the business use, then market value of the asset when first provided into 20% will not create any taxable benefit, no taxable benefit while using the asset because it was for the business use. This machine was replaced on January 25 with a new equipment 2000. George purchased the first computer from the company on December 2024 for 60 when the market value was 250. So simply 250 minus 60, there's a gift benefit of 190. Only 190 is a taxable benefit from the laptop, but which technically you can say is a gift benefit. Other than that, there is no use taxable benefit. Why? Because laptop first and second, all laptop is primarily used for the business purposes in this question. That is why there is only one taxable benefit regarding the laptop, which is 190. Quick PLC has provided George with a living accommodation since January 2021. Okay, the property was purchased in 2013, but it was given to George on January 21. Property was purchased for 1 lakh, so it's an expensive accommodation, and value 2 lakh 30,000 on January 2021. So obviously, cost will be replaced by the market value with the market value. Why? Number one, the property is expensive. Second, when this property was first given to the George, before that, ownership period more than 6 years passed. That is why cost is replaced with the market value. And since expensive accommodation, we will calculate the additional benefit as well. Gross rateable value is annual value. So simply, how will you calculate accommodation benefit? 10,150 plus accommodation is an expensive accommodation 230 minus 75 into official interest rate, which is 2.25%. So 2 lakh 30 minus 75,000 into 2.25% gives us 3,488. So this is your accommodation benefit. Okay. George was member of Quick PLC occupational pension scheme into which he paid contribution amounted to 6% of his salary. When employee contributes in occupational pension plan, then it is a deductible expense. It will reduce the employee's employment income. Quick PLC also paid contribution on his behalf amounted to 12% of his salary. When your employer contributes for you, it is an exempt benefit for the employee. So 6% of the salary will be deducted from George's employment income. So let's solve it. Actually, first we have to calculate employment income. After that, of course, income tax liability. George's salary is 9,000 per month into 12. We are getting 1,08,000. Let's go back to the question. Okay. This is done. During their George paid 150, that is payroll deduction scheme deductible expense. So less charity, donation under payroll. How much it was? 1,800. 150 into 12. Come back. Approved mileage allowance to student, the taxable benefit is 250. Please, you have to show the proper working. I'm just giving you a reference of working one, but I really want you guys to show proper workings. According to approved mileage allowance, amount should have been 5750, but employer has given more than that. So there's a 250 taxable benefit. Approved mileage allowance working one, 250. But I would request, please, you need to show proper working. Now come here. To save the time, I'm doing this. Fourth, we have to calculate the car benefit. So it's here, I think. 38,000, let's say working two. 38,000 into 37% into 3 by 12. Students, I'm getting 3515. Again, you have to show this working too nicely. Car benefit 3515. Fuel benefit is fixed, which is 27,800 into CO2 percentage and then months. And the limit of fuel benefit will also be given to you in your tax with the tax rates. 27,800 into 37% into 3 by 12. I'm getting students 2572. This is done. George was unable for then chauffeur. Payment to the chauffeur is your taxable benefit. Chauffeur payment is your taxable benefit. Chauffeur payment. Chauffeur payment is your taxable benefit. What else? Laptop benefit. Laptop benefit. Simply 250 minus 60, I'm getting 190. Accommodation is an expensive accommodation. Number one, number two, when it was first given to the George. Before that, ownership period more than 6 years passed. So obviously, we will replace the cost with the market value. So let's take here. Yeah. Directly, let me show here. Living accommodation. Annual value. What was that? 10,000? 150. Add 2,30,000 minus 75 into 2.25%. So 2,30,000 minus 75 into official interest rate, which is 225. I'm getting 3,487.5. So make it 88. Come back. Student, something went wrong with the internet. Just a minute. Mhm. Okay. Okay, when employees' contribution and occupational pension plan is a deductible expense. One lakh 8,000, we have to take 6% of that. Which is 6,480. Employer's contribution is an exempt benefit. Employer's contribution in occupational pension contribution is an exempt benefit, and you have to mention this. If you are not mentioning, you will be losing marks. Even though the benefit is exempt, one, you have to write 0, second, you have to mention as well. Now come here. I think we have covered all the points, so let's calculate the employment income. Where were we? Just a minute. Okay. Let me use the calculator. 1,08,000 minus 1,800 plus 250 plus 3,515 plus 2,572 plus 2,000 plus 190 plus 10,150 plus 33,488 minus 6,480 minus 6,480. Students, I'm getting employment income 1,21,885. Of course, personal allowance working 3. George is not going to get the entire personal allowance. So simply, if I just show you personal allowance, is 12,570 less. ANI is more than 1 lakh. 1,21,885 minus 1 lakh. We'll take 50% of that. I'm getting 10,042, so 42.5, so make it 10,943. Let's see how much personal allowance is available. So this is the personal allowance which is available, 1,627. 1,627. Taxable income is 1,20,258. So here comes, now let us calculate income tax liability of George. 37,700 into 20%. 7,540. So 1,20,258 minus 37,700 into 40%. So 1,20,258 minus 37,700 into 40. I'm getting 33,023. 0.2, leave that 0.2. 7,540 plus 33023. Students, I'm getting 40,563. George's income tax liability is 40,563. I strongly believe it is clear to everyone. A good question. Of course, examiner has almost asked each and everything regarding, I would say, employment income. Let's go to the next question. Calculate Retreat Limited's tax adjusted trading profit or loss for the year ended March 2025. Your computation should commence with operating profit figure 1,30,142 should list all the items referred to notes 1 to 5, indicating by use of 0 any items which do not require adjustment. You should assume that companies claim the maximum capital allowances available. This part of the question does not require to consider, there's no need to go for notes 7 and 8. Okay. So simply we need to calculate tax adjusted trading profit of Retreat Limited. So, okay, let's deal with that. Part A. Tax adjusted trading profit of Retreat Limited. We'll start from operating profit, which is mentioned in the question. Operating profit. 1,30,142. 1,30,142. Now let's go towards the question. Retreat Limited's statement of P&L for the year ended March 25 shows the following revenue, operating depreciation. Students, taxation authorities do not allow depreciation, so simply we will add back depreciation. Add back depreciation. What is the amount? 3,588. That's nice. Lease cost, note 1, they have deducted 6,300. Let's see. Leasing cost. The leasing costs are in respect of a car CO2 emission. Wow, wow, wow. Students, it's a high emission car. CO2 emission is more than 50 grams per kilometer. When it is more than 50, it's a high emission car. In case of high emission car, if you have taken a high emission car on lease, 85% of the rental is allowed, 15% is disallowed. You have deducted the entire 6,300. So 15% will be added back. Add lease cost 15%. 6,300 into 15%, 945. Okay. We have done this and this. Fine. Entertaining expense, note 2. They have deducted 15. Entertainment expenses. Okay. Entertainment expenses are as follows. Entertainment of customer during client appreciation week. So students, if you are spending money on entertaining customers, not allowed, you have to add back. Staff Christmas party. If you're giving this party to staff, allowed. If you're providing Christmas parties to the staff, it's 100% allowed. Gift to customers, books and pens with a Retreat Limited logo given 125 customers total. So 5,000 divided by 125, definitely it is going to be less than 50. If it is less than 50, so definitely it's an allowable expense. You can see that 5,000 divided by this, yes, we are getting 40. So one, it is not a gift of food. Second, it has proper marketing on this. So gift to customer is allowed. Okay. So entertainment to customers not allowed. Now we are dealing with entertainment cost. Simply add entertainment of customers. What was the amount? 6,400. Staff Christmas party allowed. If it is allowed, so zero because it is already deducted. And after that, gift to customer is allowed because it's not exceeding 50 pounds. Gifts to customers. Okay. We have done this entertainment part as well. Donations 13,000. Let's see. Donation. Donation Retreat Limited gave the following donation during the as part of its company strategy. Political party donation is not allowed. We have to add back. Qualifying charitable donation is not allowed while deducting trading profit. While calculating taxable total profit, yes, we do deduct qualifying charitable donation. Actually, qualifying charitable donation is deducted from the total profit. It is not deductible from the trading profit. That is why we are adding qualifying charitable donation as well. So add political donation. Add qualifying charitable donation as well. What are the amounts? 92503750. 3750. Okay. Other expenses, note 4. Other expenses, legal fees relating to the purchase of a 10-year leasing of a building. Legal fees relating to the purchase, if it is relating to the purchase, so it's a capital expenditure not allowed. Legal fees relating to the renewal of a 20-year lease allowed. If there's a renewal fee, legal fee on short-term lease, you are just renewing, it is allowed, but the purchase one is not allowed. So simply add legal fees relating to purchase not allowed. Legal fees, renewal of short-term lease allowed. Okay. Now premium paid. Retreat Limited acquired a leasehold office on 1st April 24, paid a premium 30,000. On a 10-year lease, the premium has not yet been accounted for. So students, premium paid is 30,000. And we have a space here. Okay, let's, okay, 30 less the relief. 2% n minus 1 into amount of premium. 2% n minus 1 into amount of premium. See the relief amount. I'm getting 5,400. So 30,000 minus 5,400 gives us 24,600. Time period is 10. So actually 24,600 is a deductible expense, but over the lease term, which is 10 year. So you will be deducting every year 2,460. And this will be, you can say, working number 2. Have you done any working? No, I don't think so. So this is working number 1. Working 1, premium cost 2460. Okay. Plant and machinery. Examiner has told us not to go towards notes 7 and 8. Okay. Tax written on value on the main pool is 20,000 and special rate pool is 13,000. Main pool, main pool. We need a space. Where to go, where to go. Okay, sure. Working to main pool, special rate pool, tax written down value brought forward. I think it was 20 and 13. Allowances column. Okay. Retreat Limited had the following transaction during the date. 1st June 24, purchase second-hand equipment 30,000. So you will get AIA, no issue at all. It's a second-hand equipment, first-hand equipment, whatever it is, equipment, you will get AIA. Don't worry at all. What was the amount of the equipment? 30,000. Equipment, yes, 30. 100% AIA is available. Okay. On 1st August 24, disposal of a machinery, 130% super deduction was claimed 18,000. Students, if there's a disposal of a machinery against which you have already claimed super deduction 130%, then entire disposal proceed is your balancing charge. Repeat. If during there you have sold a machinery against which company has already claimed super 130% deduction, entire amount is your balancing charge, which is 18,000. So simply you can directly write balancing charge 18,000, and balancing charge will reduce your allowance. So the machine against which we have already claimed super 130% deduction, entire disposal proceed is your balancing charge. Okay. 1st December 2024, disposal of integral feature which relates to special rate pool. 50% first year allowance was claimed. Student, if you're selling special rate pool asset against which you have claimed the 50% first year allowance, then 50% of the sale proceed is your balancing charge. Remaining 50% is deducted from the special rate pool. Repeat. How to deal with this 14,000? 50% of the sale proceed is your balancing charge, and the remaining 50% will be deducted from a special rate pool. So come here. Disposal. How I'm dealing? From a special rate pool, I'll deduct 7,000, and remaining 7,000 is your, you can see this 14,000 into 50%, and 14,000 into 50% will be your balancing charge. Balancing charge will reduce your capital allowance. Now, special rate pool 13 minus 7 will give me 6. Now I'll be applying written down allowance, which is 18% and 6%. Calculator. Okay. 20,000, if I take 18% of 20,000, 3,600. So here comes 3,000. Okay, I'll take this as well. 6% of 6,000 is 360. So 3,600 plus 360, I'm getting 3,960. So we have allowance 30,000, balancing charge is 18, which reduces your allowance. Balancing charge is 7, which further reduces your allowance. 3,960 increases your allowance. Student, capital allowance is 8,960, and this is working number 2. Capital allowance is 8,960. Let's see what is our tax adjusted trading profit. 1,30,142 plus 3,558 plus 945 plus 6,400 00 plus 9,250 plus 3,750 plus 3,000 minus 2,460 minus 8,960. Students, I'm getting 1,45,625. That is your tax adjusted trading profit. Okay. That is part A of your last question. Let's see the part B. Part B, this was A, 11 marks. 4 marks. Calculate retreat taxable total profit for the year ended March 25. TTP. We have already calculated the trading profit, okay? Now we are solving part B. We have already calculated the trading profit. And trading profit was 1 lakh. We are getting it from part A. 1,45,625. Now, obviously, we have already read and done with first 6 notes. Now, let's see what is written in note number 7 and 8. Dividend received. Retreat Limited received the following dividend during the year. Can I say either the dividend is coming from your subsidiaries or even it is coming from non-subsidiaries, non-associated companies? It is an exempt income. Yes or no? Please reply, students. Dividend, which is coming from one company to another company, is an exempt income. So dividend simply, where were we? No need to do anything. And kindly, there is no need to think for the right now that augmented profit and corporation tax liability. Examiner is not asking us to calculate corporation tax liability. So dividend income will not be a part of taxable total profit. Dividend income is exempt within the corporation tax. Okay. Chargeable gains. 23rd December 24, Retreat Limited disposal of its 3% shareholding in an unconnected company. So let's see working 1 for part B. Disposal proceed is 1,10,680. The shareholding was purchased. Student, it was purchased before December 17. Then you should not ignore indexation allowance. Cost is 80,324. We'll get unindexed gain. 1,10,680 minus 80,324. Students, I'm getting unindexed gain. Less indexation allowance. Less indexation allowance which they have given us from June 6 till December 17. So 80,324 into 0.401. 80,324 into 0.401. Students, I'm getting 32,000 210. Let me recheck. 80,324 into 501. Yes. Oh, I have to write zero. Why? If you recall, we have already discussed in our regular classes many times that indexation allowance cannot create loss. It cannot create loss, capital loss. It cannot increase the capital loss. So actually, chargeable gain, working one, it is zero. Wow, 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 wow. Chargeable gain, okay, we are here. So note 7 and 8, I think we have done. 7, 8 now we have done. Now we have to deduct qualifying charitable donation. Qualifying charitable donation 3750. Because now we are asked to calculate taxable total profit. While calculating taxable total profit, we do deduct qualifying charitable donation from the total profit. So right now, this is your total profit as well. 1,45,625 less qualifying charitable donation. What was the amount? 3750. Here comes your taxable total profit. Please, you have to write it nicely. 1,45,625 minus 3750. I'm getting students 1,41,875. So students, in a very, I would say, short possible period of time, in a shortest possible period of time, we have completed section C. We have discussed, alhamdulillah, all the questions of section C. And before that, we have already done section A and B. And for your exam students, I would say, first of all, of course, best of luck for your upcoming exam. And second, my WhatsApp support is available till the last day of exam, obviously to my enrolled students. Any question from anywhere regarding it has to be either from Kaplan Kit or Study Hub, no issue at all. If you get stuck in any question, you can always contact in your relevant WhatsApp groups. I personally reply, as you know that. And I do teach PM, FR, FM, ATX, SBR, AFM as well. And I hope everyone knows that ASA offers all the ACCA papers from FIA till the last paper of AAA. So all papers are available. Every teacher at ASA is expert in their courses. So from my side, students, best of luck for your upcoming exams, and the support is available till the last day of exams. So thank you very much that you people have taken out time for today's class. Thank you very much. Hope to see you all